Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. It's today weekly report. Market overview has appeared to be really small. It's because just one topic was a major driver on the gold. As you can understand, this is interest rates. Just a few comments for the week concerning this setup. So investors suggesting that if market will drop to the recent lows, it will continue downward action. So we do the same actually. We think the same, and currently the short-term scenario that we're taking a look at is mostly, we would not expect too much from this. So market is not at the strong support area. The only thing that we have is just the completion of this major A, B, C, minor COP target, and some hope that maybe market could show some wash and rinse around it and showing minor pullback, minor reaction on the COP. But at the same time, below the market we have more fundamental areas, which is the 1740 agreement support on the weekly chart, and what's more important will be 1685 conference support oversold on the monthly chart. And potentially, if you take a look at the same ABCD, the OP target stands precisely at this conference support on the monthly chart. So since we have strong supports in relatively tight range, volatility should grow on the market, because on every level that market will hit, since it stands on the weekly and even on the monthly chart, definitely on the daily and intraday charts we should get some response, some retracement. But this level currently where the market stands, it is based on not on some strong support. It's just COP target, which suggests smaller reaction. So here I plot some few levels. So here you can see conference, which is not very interesting as it stands above the daily level, but and 1836. I would say that if we will get pull back to the 1836, that already will be very good. I personally suggest that retracement will be even smaller, not as significant as this level. That's what we have on the daily. On the phone time frame chart, we're keep going with our free drive, so all preliminary work is done. As you can see, free drive is completed, COP on the daily chart is completed, divergence stands in place, trend has turned bullish. We consider, so here's by the way the most probable target I would suggest is 1804. This could be reached with this pullback. So here's on the fall time frame chart, everything is done. So if you remember, the last point in our trading plan is the reversal bullish pattern. And on Friday we discussed the possible minor free drive here on the hourly chart. But currently it's becoming obvious that we will get not the free drive, we will get the head and shoulders pattern. The only tricky moment here is that XOP target has not been reached. So I would hope that this would happen by this spike on the COP, but market hasn't touched just for a few cents. On the gold market, sometimes it happens. So when the market comes not to absolute XOP, but if you will move the 8 points right at the moment of the bar where the downside action has started, because it actually has started right from this point. In this case, you'll see perfect matching of the XOP. For the gold market, sometimes it happens, but at the same time, still existence of this XOP, it's a bit tricky moment. Why? Because it will be useless to place stop right below it with hoping that when the market hits the XOP, then it could go high again. Because now we have the obvious shape of the head and shoulders, and if market will drop back to the XOP, reaching of it will not resolve the problem. Actually, it could become just the sign that this overall bullish reaction is failed. So from that standpoint, maybe it makes more sense to place stop somewhere below the potential bottom of the right arm, somewhere between the bottom of the right arm and the head. That will save first your money, and second, resolve the problem of the untouched XOP, because if market will start dropping to the XOP, hand shoulders has failed, and touching on the XOP and placing stop below it, as I said, it will not save you. So from that standpoint, it makes sense to place tighter stop here with this trade. Here is also, you could see minor journeys as well. Speaking on the target, if pattern will be harmonic enough, we'll get the A, B, C bottom. OP stands 1804 and agrees with this level. That makes me think why I'm thinking about this level. This could be probable target. And because of that reason, this will be agreement resistance in this case. XOP of the hand shorts will be around 1822, right here. So somewhere very close to the resistance, but not quite at the 1831 area. So if we even will get the pullback to the 1804, that will be normal reaction on the target. Because guys, we have the COP, just the COP. This is not the OP, not the major target. We do not stand at oversold on the daily chart. It's actually a blank area where we don't have some significant support areas, support levels. It's just the target. That's why reaction suggesting to be either small or moderate. So will be even good reaction if we will get it at all. So because market easily could just fail this and start dropping. It's also possible. So that's what we'll keep an eye on the next week on the gold, but with the keeping in mind the major targets, which is 1740, of course, on the weekly chart, and 1685 on the monthly, where a real bullish potential could appear later for taking the long positions around these levels, for trading on the daily and intraday charts. That could be some bullish stuff with a significantly stronger action in the market. So that's our trading plan on the gold.